Hey, what's up guys? It's Rami. In this video, I am going to show you the results of my FTMO challenge along with the exact strategy that I used to pass it. Let's get right into it. So, the first thing that you're going to probably notice is the start date of the challenge. I actually did it 3 years ago, and back then we only had 1 month to pass it. But luckily right now you don't have a time limit, which is very good. Next, for the account size, I took the smallest account just because I wanted to test my strategy. And as you can see, I did pretty well. I only had one major loss. Then for the account type, I chose the swing trading account. Simply because if you take the day trading account type, then unfortunately, you cannot trade whenever you want to. So for example, let's say that I opened the trade and then at the same time, there was some specific news, maybe the CPI news or some other important news at the same time when I was opening the trade. And unfortunately, I'd lose the challenge, I'd fail it, even though the trade might be a profitable one. But just because I opened the trade and at the same time there was a specific news, that's why I'd lose the challenge. So I'll always choose the swing trading account type. So if you're a swing trader or even a day trader that doesn't open multiple trades at the same time, so basically your strategy does not require a lot of leverage, then I'd say that you should opt out for the swing trading account type. Now let me show you the results or the statistics of my challenge. So right here you can see that I have a 4.2 RRR and a 60% win rate approximately. And if you watch our courses, you know that the most important ratios or statistics that we look for are the profitability ratios. They are the RRR, the risk to reward ratio, and the win rate. But unfortunately, in FTMO and their statistics, they take into account the break even trades. So these trades, for example. That's why these numbers are actually false. So if we want to calculate the real numbers, the win rate, it's simply the number of wins divided by the total number of trades. And so the number of wins, it's 1, 2, 3, and 4. And the total number of trades, we include this, and it'll be 5. So the win rate is 4 divided by 5 equals 80%. And the risk to reward ratio, it's the average win divided by the average loss. The average win, it's the average of these 4, 1, 2, 3, 4, which is approximately 300. And the average loss, it's only this one, so it's 200 approximately. So the RRR equals 300 divided by 200, which is 1.5, and it's paired with an 80% win rate, which is very good. Now, let's move on to the charts. Here, I'm going to introduce the strategy that I used to pass the challenge. It's a very simple yet underrated strategy. It involves trend trading on only two forex pairs, the Euro JPY and the GBP NZD. And so for the strategy, I'm going to show you the first trade. First, I'll start off on the daily time frame. And here I'd assess the general market trend. Clearly we are in a downtrend, so I'll only open short positions. And I do the same thing on the 4-hour chart. We are in a downtrend, we can see lower highs and lower lows, so we'll only look for short opportunities. Next, what's the entry level? So what's the entry confluences for this short trade, right? So I'd pull the Fibonacci, this is the second step. I'd pull the Fib from the high to the low, and I want to see a rejection on either one of these levels, the 38.2, 50, or the 61.8%. And as you can see right here, we have the rejection on the 61.8%. The second confluence, the second entry confluence, it's actually on the lower time frames in general, and it's a liquidity sweep, which is this one right here. Basically, on this specific drop, a lot of traders open short positions, right? And they have their stop losses probably in this area, above the high. And that's why we call this a liquidity sweep, because it's liquidating those traders before a reversal. And the final confluence, it's actually a confluence on the lower time frames, so on the 50 minutes or on the 5 minutes chart. And we want to see a bearish reversal pattern, which is a candlestick pattern in general. And so these are my three confluences to enter a trade. But unfortunately, we cannot go on the lower time frames because we're too far in the past. So we're in 2021. On TradingView, we cannot go 3 years in the past and go on the smaller time frames, like the 5 minutes chart. And so this is the entry confluences. In the end, I entered the trade. Second, I entered the trade right here approximately. The stop loss above this high, and the take profit, it's a fixed RRR. It's at a fixed 1.5 risk to reward ratio, as you can see. So this was my first trade. Now for the second trade, I think it was on the Euro JPY. Let's see. It's on the Euro JPY where I made 2% and it was also a short position. It's open. So we'll start on the daily time frame. We are clearly in a downtrend. Then on the 4-hour time frame, same thing. Lower highs, lower lows, lower highs, lower lows. Then I think on the 1-hour chart, I drew this Fibonacci from this high to this low, and we saw this rejection on the 50%. Then on the smaller time frames, I think it's not clear on the 30 minutes, but on the smaller time frames, we can see this liquidity sweep from this area right here. So from this area. And at the same time, on the 5-minute charts, I believe we have the entry confluence for the candlestick pattern, which is a bearish reversal candlestick pattern. And so we have all of our confluences. That's why in the end, I entered this trade. This was the entry approximately, stop loss above this specific high, and the take profit at a fixed 1.5 RRR. Now, in this specific strategy, which part do you think is the most important one? Is it the first point, where we're assessing the general market trend on the higher time frames in order to see if we want to enter shorts or longs in general? Or is it maybe the entry confluences, where we're looking at the Fibonacci and the liquidity sweep, or even the smaller time frame confirmation? Or maybe it's the fact that I'm only trading on these two pairs and I only have a 1.5 fixed risk to reward ratio. So which one is the most important part in your opinion? Well, for me personally, I believe that in trend trading specifically, the first point is very much underrated at these times. So the first point is just assessing the general market trend, looking at highs and lows to see if you should open shorts or longs. Well, why is that? Simply because if you know if you should open longs or shorts, then your win rate will go up by a lot. And let's say I wanted to open a short position right here. Even though the entry isn't very good, and you can see the market went up before going down, still, just knowing where to put your stop loss and take profit, in general, you'll hit it because you're in a downtrend. So obviously, we do not want to do that. But it shows that in general, if you know that you should be opening shorts instead of longs or the opposite, it increases your own rate by a lot. That's why it's very important. And it's very much underrated in trend trading specifically. This should be the first step that you do. The second point, which I believe is important as well, is actually the Fibonacci. Not because everyone uses the Fib or it's the best tool in the world, but simply because the Fibonacci retracement means you're waiting for a retracement before entering a position. So it forces you to be patient before entering a trade at a better level. And that's what I like about it, specifically in trend trading. Finally, the last point, which is very important as well in my opinion, is that I backtested the strategy on over 15 pairs. I traded using it on all of the majors, so with the USD, and on other pairs as well. But in the end, it outperformed the other pairs on these two. And that's why I decided I will take on the challenge only trading on these two pairs. This was a very important point as well. So that's it for this strategy. As I said, it's very simple. But if you implement it well on the right pairs and under the right circumstances, then it's a very good strat. Now let's move on to the verification phase. And I'm pretty sure that you'll learn a thing or two right here. So we can clearly see from the start, I opened over 20 trades in let's say about 20 days, and I was still at break even. And on top of that, I entered a losing streak. I lost 1, 2, 3, 4, 5 trades in a row. And I was risking 1.5% per trade. I lost 7.5% in a few days. So it was very bad. But then right here, I actually risked a bit more, 2% instead of 1.5%. And I trailed my stop loss. And after I trailed my stop loss, I got 2 big wins. And that's when I passed the verification phase. Now, if we go down to the statistics, you can see I had a 1.9 RRR with a 40% win rate. And I believe these are true because we don't have a lot of break-even trades. Unlike the challenge, when we can see we have a lot of break-even trades. Probably half of the trades are break-even. That was it for the verification phase. Now, finally, I'm going to show you the most important part. The 5 key lessons that I learned from taking the FTMO challenge. These insights are crucial in helping you succeed in the challenge yourself, so take notes. The first point is that you need to backtest your strategy and demo trade with it. So like we did on historical data, and then demo trade with it for at least 3 months. And then after that, you'll have a clear strategy with a good win rate and risk to reward ratio, and then you can take on the challenge. Because you need to have a clear plan with a clear risk to reward ratio and win rate, you know your risk management strategy, you feel well psychologically, you need to train for that. That's why it's crucial to backtest, then demo trade. And then the second point, and it's linked with the demo trading, is that you need to take advantage of the free trial. Since we have the free trial and we can take it as many times as we want, it doesn't make sense to not take it. You should take the free trial at least 2, 3, or 4 times before taking on the real challenge. And this is basically the training during your demo trading phase, so after backtesting. The third point is that you don't need to make a big deal out of losing streaks. And this point is important not because only I experienced it, as you can see in the verification, but because a lot of people experience this because of the challenge. Even though the strategy might be good, and in general, you won't lose a lot of trades in a row like I did right here, because when I was backtesting, I had like an 80% win rate. In reality, you won't lose 5 trades in a row if you have a really high win rate strategy, right? However, when you're in the context of the challenge in general, you might get a little bit frustrated. You might feel FOMO like I did right here because I did have a time limit to pass the challenge, and then you'd enter the wrong setups. So if this happens with you, you don't need to worry a lot because you can change a bit with risk management and you can actually trail your stop loss, for example, and then as I did, you can get out of the situation and pass the challenge easily. Now, usually, if you watch our risk management courses, you know that we don't tell you to risk more. We tell you to risk less money when you lose in general. But here, just for the sake of the challenge, you can do that. The fourth point, which is very important as well, is that now you have unlimited time in the challenge. And so, if I had unlimited time, I'd do two things differently. The first thing is that I'd risk lower amounts per trade. When you risk low amounts per trade, if you lose your first 2 or 3 trades, you won't feel very much frustrated. You're not risking 2% per trade or 1.5% per trade. Maybe you're risking 0.5% per trade, so it's okay. Psychologically, you'll be very much at ease. And the second point, which is even more important, is that I'd only take golden setups. Instead of taking each setup that I see, I'd only take the best setups. And even though I might take 2 months to pass the challenge instead of 2 weeks or 1 month, at least I'm sure that I'm going to pass it in a real good way, not out of luck. So slowly but surely, as I say, and that's what I would do differently. Finally, the final point is that when you're an FTMO trader, you're basically trading on a demo account. And this is very important. You're monetizing your demo trading as they are saying. Because before, people used to think that when you're trading an FTMO, you're trading some investor's money. And so if you lose, the investor loses money. In reality, it's all bullshit. You're trading on a demo account. We all know that. And now they are saying this publicly, as you can see. So psychologically, you should feel very well. No FOMO, no FUD, no fear. You're just like trading on a demo trading account. So psychologically, you should be feeling very resilient and confident. So that was it for this video. I hope you enjoyed it. If you have any questions, don't hesitate to shoot them inside the Discord as usual. The link is in the first comment below. See you guys in the next video.